Coming up on Market to Market, USMCA countries discuss what's next for immigrant farm labor. Mayors along the Mississippi give the mighty river a new report card.
You bring speculators out of the market.
And market analysis with Shawn Hackett next.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, March 5 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Brooke Kohlsdorf. Paul Yeager is away this week. Everyone has felt some kind of pinch from the pandemic, but optimism over returning to a new normal is increasing. Last month, 379,000 jobs were created. Economists are mixed on when the rest of the 10 million jobs taken out by the pandemic will be reinstated. The infusion of jobs lowered the unemployment rate to 6.2%. Earlier in the week, Chairman Powell indicated the Fed will leave interest rates alone until employment numbers improve. Despite the positive news, the trade gap rose nearly 2% in January, and the trade deficit with China fell 3.2%. Creighton's Mid-America Business Conditions Index stayed above growth neutral for the 9th month in a row. Rural America's manufacturing sector expanded even with supply bottlenecks and a lack of people on the line. One sector looking to replenish jobs is agricultural farm labor. President Biden met last week with Canadian Prime Minister Trudeau, and this week he continued his tour of USMCA countries. Peter Tubbs reports.
This week, the presidents of the United States and Mexico met virtually to discuss the long list of issues that are simmering between the countries: trade, the coronavirus pandemic, immigration, and the national security of each nation.
The United States and Mexico are stronger when we stand together. There's a long and complicated history between our nations that haven't always been perfect neighbors with one another, but we have seen over and over again the power and the purpose when we cooperate, and we're safer when we work together, whether it's addressing the challenges of our shared border or getting this pandemic under control.
The shared border was a focal point of the Trump administration, which replaced roughly 600 miles of existing fence along the nearly 2,000-mile border during its tenure. American demand for farm labor over the last 20 years has risen, and the industry still employs 500,000 foreign-born workers to harvest the nation's fields and milk the country's cows. Up to half of those workers emigrate from Mexico. Maintaining a supply of inexpensive seasonal workers for agriculture has challenged previous administrations. The Biden White House has signaled a less provocative stance toward the country's third-largest trading partner. Mexican President Andrés Manuel López Obrador welcomes the lowering of the political temperature. I believe that our proximity will allow us to develop better in these times, to integrate ourselves as has been done with the treaty, for North America to complement itself, to integrate itself economically and commercially. It will make us stronger. For Market to Market, I'm Peter Tubbs.
The Mississippi River is a major lifeline and superhighway for Midwestern grain. The towns along that 2,340-mile stretch of water are responsible for creating more than $400 billion in commerce. As goes the river, so goes the livelihood of those holding the 1.3 million jobs along the route. There is one group that has responsibility for what happens next along the banks of the mighty river, and they take their job seriously. Josh Bittner has more.
This week, the Mississippi River Cities and Towns Initiative held their annual Capitol meeting at the mouth of Sea Change in Washington.
But it makes us a hell of a lot more competitive around the world if we have the best infrastructure in the world.
The renewed drive by the administration to arrive at a climate solution is something that we support in a broad sense. but that drive cannot leave middle America behind.
For nearly a decade, the regional mayoral assemblage has promoted economic and environmental security for riparian communities along the crucial inland waterway and cultivated a bicameral congressional caucus able to champion policies beneficial to America's largest watershed.
The first thing we need to do is to pass this American Rescue Plan from President Biden. There is billions, literally billions of dollars coming back to your local governments as a result of it.
Look at our federal
While unveiling their own plan to address presidential priorities, Rivertown mayors and emergency management officials called on federal lawmakers for pandemic support and authorization of new natural disaster-related revolving loan funds.
Safeguarding Tomorrow through ongoing Risk Mitigation Act. It was signed into law in January. So bottom line up front is FEMA cannot implement the act until there's a congressional appropriation to fund it. What the act does, as you mentioned, $100 million is authorized for fiscal years 22 and 23.
The conference coincided with a new report card from the American Society of Civil Engineers, which upgraded the nation's infrastructure to C- from a previous D+, largely due to bridge improvements. But some were quick to point out the disparity of a ubiquitous framework in use decades past recommended lifespans.
60% of the world's grain ships up and down that Mississippi River. We fear, as a consortium of mayors up and down the river that want to move all products to the world and continue to feed the world, that if we don't invest now in our lock and dam infrastructure, we may be too far behind the curve to catch up.
The importance of safeguarding an agricultural export market worth billions annually was evident, as were concerns over shipping competition from China and an expanded Panama Canal. Assembled mayors say federal action would accelerate private investment and bolster industries from farming to tourism and beyond.
We've got great partners in places like Walmart and Home Depot that have agreed to help us if we can move the container on barge to fill those containers to come back up the river. But we're really not going to get that kind of investment until or unless we can get some help in the infrastructure of the river. It is the world's largest working river.
Pollution concerns, specifically the rising tide of chemicals from one-time use plastic products, also were a key component of the summit. Partners in academia, along with international and philanthropic interests, launched a smartphone application to crowdsource solutions.
I'm thrilled today to be part of the formal launch of this initiative, which is aimed at harnessing the power of ordinary people to become citizen scientists in their communities along the river to help us generate data for a plastic pollution map. If you can't measure a problem, if you can't assess a problem, it's very difficult to understand how to solve a problem.
While the temperature figure gets the most attention, it has several cascading impacts. Warmer air attracts more moisture, resulting in higher precipitation. And this precipitation comes in very heavy, small number of events, so simultaneously raising the risk of drought and flood.
Dovetailing with federal climate ideals, the virtual event culminated with mayors signing a memorandum of common purpose with Ducks Unlimited.
And here we go.
In addition to what it means to people, the Mississippi River Valley is a vital migration corridor for 40% of North America's waterfowl and 60% of all bird species.
The Memphis, Tennessee-based world leader in wetlands and waterfowl conservation will help deploy natural infrastructure in 3 pilot locations, upper, middle, and lower portions of the river, which creates habitat, improves water quality, and mitigates flooding and other adverse weather risks to riverbank municipalities. CEO Adam Putnam says partnerships are essential, and those working the landscape can join his efforts with federal assistance.
And DU really sees ourselves as a trusted partner to those farmers and ranchers to connect them with our partners at USDA to enroll them in those programs. And that ground that is not the best for agriculture, in many cases, is the best for conservation and sustainability purposes.
For Market to Market, I'm Josh Bittner.
Next, the market-to-market report.
Weather in South America, rumors of buying by China and positioning before next week's WASDE, made for volatile markets. For the week, as of noon on Friday, May wheat lost 7 cents, while the nearby corn contract fell 8 cents. Renewed Chinese buying and a lack of rain in Argentina made for a late week surge in the soy complex. Nearby soybeans improved 18 cents. May soybean meal dropped $6 per ton. May cotton shrank $1.63 per hundredweight. Over in the dairy parlor, April Class 3 milk futures gained 15 cents. It was all down arrows in the livestock sector. April cattle fell $1.17. April feeders dropping $3.75, and the April lean hog contract shed 7 cents. In the currency markets, the U.S. dollar index skyrocketed 117 ticks. April crude oil increased $4.35 per barrel. COMEX gold weakened $33.60 per ounce, and the Goldman Sachs commodity index added more than 12 points to finish at $490.25. Now here to provide insight is one of our regular market analysts, Shawn Hackett. Hi,
Brooke.
Shawn.
How are you?
Yeah, doing well. Thanks for being here.
It's always a blast to be on Market to Market. So.
And be here in person, right?
Absolutely.
Doesn't that feel good?
It's way better. Yes.
All right. Well, we'll start with wheat. So wheat's been chopping around a little bit this week. We heard that the weather was good in Ukraine, but there's concerns about the drought here in the United States. Where is that push going to come from for wheat to go up?
Well, as you know, we had a couple of winter kill events in Russia and here. And so the market had that initial surge of excitement. And of course, you never really know what winter kill is going to do until you come out of dormancy, which we're starting to do now. We think some of these crop condition readings that we're going to start to get from the USDA and show how bad the crop is actually coming out of dormancy could be the initial trigger. And we do expect a dry, summer or spring growing season for winter wheat that could be another additional catalyst. So we're really constructive KC winter wheat for those two reasons.
Okay, what's pushing the prices lower?
Uncertainty right now. We're just in a pause. The market's just uncertain. Most winter kill events are a lot of fanfare and they don't deliver as a wheat always seems to come out of it. But we think it's different this time. I know it's a statement you shouldn't be saying, but we do think it is. We think that the extreme cold against lack of snowfall this particular time did a lot more damage than the market's expecting.
Okay. All right, so we're talking about corn now. So we still have concerns in China about the swine fever. There's weather issues in South America. The Chinese look like they're buying again, but the market is headed down for the week. So what is going on?
The corn market is kind of stuck in a place where we're going to get this acreage report coming. We think we're going to have a very, very good planting season. You get out of the gate early and fast, more corn acres than not. And the market is just sort of saying we've sold so much to the Chinese and we have so much undelivered supplies, meaning we haven't shipped, so we have so much to ship. I think the market's a little worried that let's get those shipments out. Let's show that we're going to move some of this corn we've sold before we get excited about new demand from China.
The WASDE report is coming out on Tuesday. Is part of the price drop leading up to that?
Well, the last report, if you remember, everyone was expecting a drop-off in ending stocks, and we didn't get it. And it really disappointed the market. And the corn market's been kind of struggling ever since. So there's hope that maybe the USDA will drop corn ending stocks by increasing the demand. We're not really so sure that they're going to be willing to do that. We think they like to make more aggressive adjustments in the April report. We're kind of agnostic on the Tuesday report, delivering a bullish signal. So we think the market's kind of sensing that maybe we shouldn't get too excited about that report.
Do you think the Chinese are stockpiling corn?
We don't think they are. Okay. If they were stockpiling corn, if they really were adding extra corn they didn't need, we wouldn't see the corn price domestically in China as high as it is. We really think they just got themselves into a bind. They had a terrible crop last year from those historic floods. And even though they'll never tell you that, the cash market in China tells you they got really in a lot of trouble. And all these ships waiting off of the Brazil coast to catch the soybeans, they're going to do the same thing for the corn once the second crop corn comes to the market. So we think the market's telling us they're not stockpiling.
Okay. Soybeans. So we saw the market kind of go all over the place. They were up on Tuesday and then they were down. Is there anything to feed the bulls? Is this rally done with soybeans?
When you're dealing with 120, 130 million bushel carryout, every little tiny adjustment either way makes the market go up 50 cents. So very, very hard from one day to the next to know which way the market's going to. Oh, the weather's a little bad. Now the weather's actually good. Demand was a little disappointing. So we just think we're stuck in a very volatile sideways trade into the springtime on soybeans. We don't expect this pattern to really change until we get further in and see what kind of acres we actually get planted here in the U.S.
Would a drought help or hurt beans?
Well, a drought, of course, would help, but the way our natural climate cycle algorithm is projecting, we're seeing a drought and a hot, dry pattern mostly into July with August backing off. That means corn could get in a lot of trouble with yield, but soybeans could get bailed out. Soybeans could rally on the worry, but we think the actual crop problem could be in the corn market. So we think the corn market could drag the soybean market up, not the other way around this time.
How do the exports look for the rest of the year?
Well, I think it's going to be based upon the kind of production we expect to see in the U.S. We already know South America is going to be probably not top end. We don't know how far below top end, but it's not going to be the bin buster crop we had last year. So everybody wants a big U.S. crop. If it looks like that crop's going to make it, then they'll back away and saying all is well. But if it looks like we're going to come up short, as we believe we are, then they're going to pedal to the metal again and really, remember last year exports picked up in August when they realized our crop was going to come up short. That could be another month for a trigger for them to come back and buying aggressively again.
Okay. So we'll move on to cotton. You're our cotton expert, or at least one of them, right? So cotton is down. Is the battle for acres playing in, or part of the reason for this?
No doubt. I mean, it was just a few months ago that they were going to lose a lot of acres because they were way down, and then they had this incredible run on this endless demand from China because of the policy of not buying China labor cotton, which means the Chinese had to buy cotton from us to make the clothes to sell to us, because if not, we wouldn't take it. So it was this forced demand that just kept the market going up. And now it looks to us like cotton acres could be flat or even up a little bit. So that's a big, big change. And March, the cotton market tends to like making highs in March ahead of planting season. I think they've done enough to do what they need to do on acres, and then it comes down to what will Mother Nature do in the state of Texas really is what it really counts.
Yeah. What about the dollar right now? Is that going to impact demand for cotton?
I mean, a stronger dollar, which we've been seeing late, in the last few weeks, always on the margin creates some headwinds to exports. Of course, if you need it, you need it. No matter what, you pay what you have to pay. But on the margin, we've been dealing with a tailwind all last year that the dollar was going down, and that was creating this inflationary, wave. Well, that's kind of come off a little bit. We've seen copper got hit really hard, and there's a lot of selling from speculators on this stronger dollar policy, because right now these interest rates on the long bond have gone up, and it's worrying the market that could maybe create some capital flows into the U.S. that creates that strength in the dollar that we've been seeing. So that's something to monitor. The Brazilian real, by the way, got crushed this past week, and that's always inverse correlated to to the grain price, because Brazil is such a dominant exporter. So the weakness in the real is not a helpful sign for the grain markets to get their act together. That keeps them kind of in check, which they have been.
All right, well, we'll move on to meats. They were kind of mixed. Live cattle, there was some Chinese buying this week, but the market finished lower. So is it the dollar? Is that part of the problem?
Well, I mean, I don't think the Chinese is going to buy our pork because the dollar is strong or weak on the margin. I just think they bought so much pork from us. Their supplies have grown a lot. I know we've heard some ideas that ASF is coming back, but the bottom line is their supplies are way larger than they were a year ago. Their exports are coming off from what they were a year ago, and the U.S. producer has geared up to sell them all this pork, and we really worry, that we could have a kind of a problem in the back half of the year, that too much supply is going to chase too little demand if the Chinese really back away, as we think they could. We could be making a pretty important high here going into April.
What about U.S. or consumer demand?
Well, that obviously, if we get those vaccines going and people get confident and we go back out and we grill and we go to restaurants, I mean, that's going to be good for all meat demand. But at this price level for pork relative to beef, relative to chicken, it's kind of like the pork market's kind of pricing itself out a little bit. We worry that maybe it's done too much of a good thing, that it might give away some demand to these competing meat supplies.
Okay. What about the feeders? What's going on with that?
This constant concern over the corn price and that corn price going higher is always a detriment to the feeders market. We really worry about the feeder market later in the year, because if we're correct about a drought cycle and that the July being really, really hot, dry during pollination, and we get the corn market to have another wave higher, it's really going to set the feeder market back. So we still think they could have a little bit of a runway here, maybe into April or May before the corn market gets going again. But once that trigger gets going, we think that the feeder market could be in a lot of pressure. We'd be looking to be sellers this spring.
Okay. So with hogs, they ended down this week. What could drive the market higher?
Well, if the Chinese, after they're done with these holidays, they come in with guns a-blazing and buy a whole bunch again, maybe to refill some of the temporary stocks, that could certainly give the market some short-term confidence. And, that certainly could be there. We're not anticipating that. We just think that the market, when you approach that 95 cent area, on the June contract, it's going to be really hard to get over that hump without something dramatically changing with what we are currently looking at.
Okay, so we want to talk to you a little bit about dairy as well. So in one of your weekly reports, you said that dairy may blow the top off prices in 2022. So what do you think, though, in the short term?
The government supported U.S. price and gave a lot of return to the dairymen in the back half of last year, and that has gotten production growing in excess of 3%. That's bearish, especially into the seasonal strong production period into April, May, and June. However, the rest of the world didn't have that support, and they're growing production minimally. We're looking at GDT price, which is the international auction price for dairy, skyrocketing with whole milk powder prices jumping double digits this past week. There's a shortage. Fluid milk prices in China going parabolic into this week. So we have a big shortage outside the United States. So once we get through this bulge in production in the U.S., we're pretty excited that the back half of this year into 22 we will be able to feed that shortage, because we're the only ones that have excess milk to supply. So it would be a really good period for dairy producers to make really good returns on the farm.
Yeah, they've had so many struggles that it would be nice to see them.
For sure. And it'd be nice for the real market to give them that money instead of the government doing it. Always prefer the real market to do it. And so I know they would appreciate that.
Yes, for sure. All right, I want to go back to grains and talking about the battle for acres between corn and beans and wheat. Where do you think this is all going to settle?
The big thing in the last few years has always been those fringe acres, which is loaded with corn, and we've been able to plant these big corn numbers every year. With the price where soybeans are versus where the price of corn is, and how the shortage we have in the U.S., we think the majority of those fringe acres are going to go to soybeans, even if we have a good start to the planting season. The core is going to be the core. They're going for corn. Corn prices are good. But to lose all those fringe acres, which are considerable, especially in the Dakotas, we think the corn acres actually could disappoint and not be as strong as we've been accustomed to seeing them. And we think this is the year soybeans need the acres. They want the acres. They're screaming for the acres, and the fringe acres are going to give it to them. Okay.
All right. Thank you for your time and your insight, Shawn. Great to have you on the show.
Thank you, Brooke. Thank you so much.
All right. Well, that will do it for this installment of Market to Market. We will be talking more in Market Plus, so join us there. You can find it on our website of markettomarket.org. For the next 2 weeks, we are involved in an important part of public television. It's called Pledge Time, and many of the stations that carry this program may shift when we're on, but the message is clear. If you value the work done on this program, please consider supporting the work we do with a financial contribution to your local PBS station. Next week, we will check out the long-term effects of damage done by snowstorms that hit the winter vegetable crop. Thanks for watching, and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.